If you receive Social Security or SSI right now, I need you to stop whatever else you are doing for the next few minutes and stay with me. There is a rule change moving through the Social Security system right now that changes who can look inside your bank accounts, how often they can do it, and what happens to your monthly check if they find something you did not report. This is not a proposal sitting in a committee somewhere. It is a documented change already in motion. And most seniors I hear from have either never heard of it or have heard a scary headline about it without understanding what it actually means for their own deposit. I am not talking about something that might happen someday. I am talking about a real, current change to how benefits are verified and the specific things you need to understand before it touches your account. My name is Hank Mercer. And before we go any further, if this is the kind of information you want delivered to you before the deadlines arrive rather than after, hit subscribe right now and turn on the notification bell. What I cover on this channel tracks Social Security rules, Medicare updates, and retirement planning changes as they happen, because the rules do change, and the people who are subscribed find out in time to act. Now let's get into it. What this rule actually is, the system at the center of this is called AFI, the Access to Financial Institutions System. In plain English, AFI is the electronic tool the Social Security Administration uses to verify what you actually have sitting in your bank accounts. It has existed for years. What has changed recently is how often the agency is required to use it, and how few restrictions stand in the way when they do. For a long time, there was a threshold rule. The SSA would only run a full bank verification when your reported resources were over a certain dollar amount. If you reported having very little, they often did not look further. That threshold acted like a speed bump, limiting how often the agency reached into anyone's accounts. Under the expanded directive, that speed bump has been removed for a much wider group of people. The agency is now directed to run financial institution verification on essentially all new SSI claim allowances, regardless of how much you say you have, and to do it more frequently across the life of your claim. This expansion was formalized through an SSA emergency message issued in 2025 and has continued rolling out through 2026, with particular focus on applicants and recipients aged 65 and older. The reason behind it matters, because understanding it is what helps you stay on the right side of it. SSI is a needs-based program designed for people with very limited income and resources, and it carries a hard resource limit. For an individual, that limit has long been $2,000 in countable resources. Go over it and your eligibility is affected. The agency's position is that improper payments, money paid to people who turned out to be over the limit, are one of the biggest sources of error in the program. So the logic is straightforward. Verify accounts more often and more completely, and resource problems get caught earlier, before a large overpayment builds up that the agency later tries to claw back. That is the legitimate side of it. An overpayment is not a gift. If the SSA pays you money you were not entitled to because you were over the resource limit, they will eventually find it, and they will ask for it back. More frequent verification is, in part, the agency trying to stop that problem before it becomes a bill with your name on it. Who this actually applies to? Here is the part that catches people, and it is worth sitting with. A lot of people hear SSI bank access rule and think, that does not apply to me. I am on regular Social Security retirement, not SSI. Or, I am on Social Security disability insurance. That is different. You are right that this specific rule, as written today, is built around the SSI program. But here is what is worth understanding about the direction this is moving. SSI is almost always where these verification changes start. It is the needs-based program, so checking resources is already built into its design. The tools, the automated bank access, the systems behind all of it, get developed and expanded inside SSI first. The broader conversation around government benefits, on both sides of the political aisle, increasingly touches on the idea of means testing other programs down the road. Means testing simply means adjusting what you receive based on how much money and how many assets you already have. And you cannot means test anything without first being able to see inside someone's accounts. The verification machinery being built and expanded for SSI right now is the same kind of machinery that would be needed to look at resources for any other benefit in the future. This is not meant to alarm you. It is meant to make sure you are not caught off guard later by something that started here. What the verification actually finds when the SSA runs AFI on someone, it does not just check the one account that was reported. The system can run up to 10 geographic searches tied to a person's information based on their address, And it can also pull in addresses and identifying details connected to a representative payee if one is involved. It detects the accounts that were reported, and it detects accounts that were not reported. This is the part worth absorbing carefully, because it is often not about hiding anything. It is about forgetting. A lot of seniors have an old account somewhere they have not thought about in years. A savings account at a bank that got acquired by another bank. A small credit union account opened decades ago for a car loan that still has a few $100s sitting in it. A certificate of deposit or relative setup. People may genuinely not remember these exist. The system does not care that someone forgot. It finds the account and it counts it. So if someone on SSI has been operating under the belief that their countable resources are comfortably under the limit, an old forgotten account surfacing in a scan can change that math in a way nobody saw coming. This applies even to joint accounts. If your name is on an account, even one where the money genuinely belongs to someone else, the system counts the full balance as your resource until you prove otherwise with documentation. Here is the full scope of what the system looks for. Checking accounts, savings accounts, money market accounts, certificates of deposit, credit union share accounts, and special purpose deposit accounts like Christmas Club or Holiday Club accounts. Essentially, anywhere money can be deposited or held at a bank or credit union, this verification is built to reach. It runs across all 50 states, the District of Columbia, and the territories. The large majority of financial institutions participate in the automated system, meaning verification can happen electronically without the account holder ever being directly involved in that step. For the smaller number of institutions that do not participate, the agency uses a paper-based process instead, but the reach is nearly nationwide. The bank scan is not the only system in the picture either. There are payroll information exchanges that can show what someone is earning through an employer's payroll system, sometimes quickly enough to adjust the next check. There are systems that pull from national new hire databases. There are wage verification tools specific to SSI. Each one confirms a different piece of the income and resource picture. The point is not to memorize the names of these systems. The point is to understand that verification today is automated, layered, and far more thorough than what many people remember from years past. How a verification actually plays out. Picture someone applying for SSI who reports a small checking account with about $20 in it and a $100 certificate of deposit. Total reported resources around $120, well under any limit. Under the expanded approach, the agency still runs the bank verification, even though the reported amount is tiny, because verification is now required regardless of the alleged amount. If the scan comes back and simply confirms the checking account, with no other accounts surfacing, the resources are validated and the process moves forward cleanly. No issue. Now change. One detail. Suppose the scan comes back and shows the checking account holds more than what was reported, or it surfaces an account that was never mentioned at all. Now the agency has to dig deeper. It has to verify the value of the certificate of deposit, look harder at the other balances, and the tolerance that would have let a case move through quickly no longer applies because the verified total is higher than what was reported. And here is the pattern across the life of a claim. If verified resources stay low and consistent, a person may face fewer repeat scans. But if a scan ever shows someone near or over the limit, expect to be verified again and again at multiple points, because the agency is specifically directed to keep checking once the numbers suggest a resource problem. What to actually do about it? This is the part that protects your check. 4 clear actions. First, if you are on SSI, find every account with your name on it, not just the one your check goes into. Sit down this week and make a complete list. Main checking, any savings account, any old account at a bank that may have changed names or been acquired, any credit union account, even one opened decades ago and forgotten, any certificate of deposit, any club or special purpose account. If you are not sure whether an old account is still open, call the institution and ask directly. The goal is to know everything a scan would find before the scan ever runs, so there are no surprises that put you unexpectedly near the resource limit. Second, understand your countable resources against the limit. For an individual on SSI, the resource limit is $2,000. For a couple, it is $3,000. Add up the liquid resources across every account. If you are comfortably under, there is far less to worry about. If you are anywhere close, that is the moment to get clarity now, because a forgotten account is exactly what tips a closed case over the line without warning. Third, if your situation has changed, report it correctly rather than waiting to be caught. The systems are designed to find unreported resources, and the safest position is always accurate, timely reporting on your end. If you came into money, even a modest amount, understand how it affects your eligibility and what your reporting obligations are before the next verification cycle, not after. Fourth, when the agency contacts you about verification or sends a redetermination notice, respond promptly and honestly, and keep documentation of everything. The worst thing to do with a benefits verification is ignore it or guess. If you are unsure how a particular account or asset affects your situation, that is exactly the kind of question to bring to a qualified professional who can look at your specific circumstances. The scam already attached to this rule. Anytime a rule like this gets attention, a scam attaches itself to it within days, and this one is already happening. Here is how it works. Someone hears about a new Social Security bank access or verification rule from a video, an article, or a neighbor. Within a short time, they get a call or an email from someone claiming to be a Social Security verification specialist, a benefits compliance officer, or a federal account review service. The caller says that because of the new rule, the person's accounts need to be verified or pre-cleared, and that they can handle the process, protect the person's benefits, or shield their accounts from the scan. For a fee, sometimes a few $100s, and sometimes a percentage of the ongoing benefit. Here is the one sentence that exposes this every single time. There is no fee, no service, and no third party that can shield your accounts from official verification or carry out this process on your behalf. The verification is something the Social Security Administration conducts directly. There is no authorized middleman who can opt you out of it, pre-clear you, or protect you from it for money. Anyone offering that is selling a fiction, and what they are usually after is your Social Security number, your bank account number, or a verification code. Write this down because it is the actual protection. The real Social Security Administration will not call out of the blue and ask you to confirm your Social Security number or bank account details over the phone to comply with a new rule. They already have that information. When something needs to be verified, the legitimate process runs through your application, your redetermination paperwork, and official mailed notices, not through an unexpected inbound phone call demanding immediate action. If someone calls claiming they can handle this rule for you, end the call. If you have questions about your own situation, go directly to the source. Call the SSA at 1-800-07-72-1213, a number you look up yourself at ssa.gov, never a number a caller gave you. Report scam contact to the SSA fraud hotline at 1-800-2690-271 and to the FTC at ftc.gov. Those reports genuinely help investigators track these operations. Additional context worth knowing. A few more things worth understanding about how this fits into the bigger picture. This expansion is part of a broader SSA effort to reduce what the agency calls improper payments. Across its programs, not just SSI, audits from the SSA's own Office of the Inspector General have repeatedly flagged unreported financial accounts as one of the leading causes of overpayments in the program, which is part of why the threshold-based approach was phased out in favor of near-universal verification. It is also worth knowing what does not count against you. A checking or savings account is not treated as a countable resource if the account holder does not actually have the authority to withdraw funds, or if withdrawals require permission from a third party. This matters for people who may be listed on an account in a limited or restricted capacity, rather than having full access to the funds. Finally, this same verification infrastructure is also used during the initial SSI application process itself, not just after someone is already receiving benefits. Anyone applying for SSI today should expect this level of verification from the very first application, not as something that arrives later as a surprise. Where this leaves you, this is part of a larger shift toward more automated, more frequent, and more complete verification of what people on SSI have in their accounts. The systems are getting more thorough, and that trend is not reversing. None of this comes with a friendly letter walking anyone through what it means for their specific check. The agency does not call to coach people through staying compliant. The system simply runs, and the people who stay protected are the ones who understood how the verification works, knew what it would find, and got their own picture in order before it ran. If you are on SSI, the list of accounts and the math against the resource limit is worth doing this week, not someday.